Last night, while I slept, I earned £15 in income. If I kept that going for the entire year, that's going to earn me approximately £6,000. And I could do that because it was a low risk income. I literally could go to sleep without worrying about it. In this video, I'm going to show you how you too can make similar kinds of investments, low risk, halal, income generating investments, so that when you are sleeping as well, you're making money just like me. We'll be investing £100,000 and I'll show you how you can generate more than £450 every single month. For those of you who are new to this channel, I'm Ibrahim, and since 2016 I've helped millions of Muslims with their personal finances and their investing. I run an investment firm called Curate Capital. I've written a best-selling book and hold qualifications in Islamic law, investment management and corporate law. Let's begin. The first option, in my view, that is underutilized by most of our community is Islamic savings accounts. Many Muslims have their savings sat either at a current account at a bank like HSBC or Halifax, where you're not earning a penny, or worse, it's sat at a savings account at these kind of banks where it's giving you interest. And either those people are giving that interest away, thousands and thousands of pounds over the years, or they are actually taking that interest without realizing that this is literally like eating pork. Now, this is a massive missed opportunity. You can easily start making money instantly by switching from a conventional bank to an Islamic savings account. And Islamic savings accounts are actually historically the ones that pay pretty much at the top of the market. If you look at Money Saving Expert, if you look at Raisin.co.uk, both of those will show you that Islamic banks are actually the best performing. These accounts use profit sharing from the Islamic bank's investments to make return. So it's not interest, and historically these returns offer in the range of somewhere between 1% and 4% per year. So you don't necessarily get super rich, just like any savings account, you won't get super rich, but it is still definitely better than leaving it in cash in your current account. Some examples of Islamic banks that offer these kind of savings accounts are Al Rayyan Bank, Gatehouse Bank, BLME Bank, QIB and Al Ahli. The risk here is pretty low because these are typically AAA rated banks backed by a sovereign government in most cases, and they are guaranteed up to £85,000. But your capital above £85,000 isn't necessarily guaranteed. And inflation can, of course, still outpace your profits. So if you put all of your money into these savings accounts, you will actually end up still losing, because if inflation is more than the rate that you're getting, for example, if inflation is 6% and the savings account rate is 4%, then net you're actually going to be losing out. So this kind of investment is great for your emergency fund or for savings that you really can't afford to lose and will most likely to use them relatively soon, but it's not appropriate for your entire passive income portfolio. Number two, we've got Sukuk. So bonds are a stable part of many non-Muslim portfolios as they are low risk but pay slightly more than a savings account. The good news is that there is a halal alternative, and this is called a Sukuk. And this is an asset-backed, effectively bond, so your returns come from the rent that you receive on the asset instead of the interest that bonds pay. So a bond will be the government saying, I want to borrow some money off you guys, can I have some money and I'll pay you interest. Sukuk is the government says, here is a property that we own, we want to sell it to you and we will pay you rent on that for a defined duration of time, and at the end of it we will buy it back off you. So that's how a Sukuk works. Typical returns here are usually between the kind of 2 to 6% annually, and there is volatility on the actual principal that you're investing as well, because this is an actual investment. So depending on where the interest rates are globally and depending on where the markets are globally, your actual value of investment will go up and down somewhat as well if you want to liquidate it and exit it before the term is up. You can get Sukuks from most investing brokers like Trading212, AJ Bell, Interactive Brokers, etc. through investing in a Sukuk fund. So iShares have a Sukuk UCITS ETF, HSBC, MSCI have a Sukuk ETF. When you're investing in a Sukuk fund, the risk of a particular SUK, which is the singular of Sukuk, is actually very spread because you're investing in a basket of these things. The challenge that some people might have is that the overall return in a fund I mean, a Sukuk is not going to return a massive amount anyway. So the overall return in a fund, because it's diversified and you have fees on top, will become even lower. And so people do want to sometimes invest in specific sucks. But the problem that you have there is that you need to be investing hundreds of thousands of pounds, usually in the millions, and find a specialist broker that will allow you to get access to one of these Sukuk issuances. And that, unfortunately, is not for the retail audience in most cases. So for most folks who are watching this, the only way in really is to invest in a Sukuk fund. Option number 3 is halal property and income funds. Property is an asset class that is really well known to the Muslim community, and the saying safe as houses is pretty true, but it's not completely true. When you buy single houses, you are putting all of your eggs into that particular basket, and there's a whole heap of admin that comes with buying and renting and maintaining and renovating a house. So the low risk way to do property today, in my view, especially with the way that the taxation system is to outsource the day-to-day things to professionals, and you have a sizable portfolio, so the money that you're paying these professionals is enough to still make a decent profit on top. And I think that number for you to be looking at doing it directly is probably in the region of £3 to £5 million. Or the alternative is that you invest in property funds that invest in dozens and hundreds of different properties. And this gives you the benefit of diversification, so all of your eggs are not necessarily in one basket. And it also means that you get different types of real estate out there, because real estate is not this monolithic asset class. You've got real estate that is office, you've got real estate that is houses, you've got real estate that is flats, mixed-use real estate, industrial real estate, scientific lab-based real estate. There's all sorts of real estate out there, and not all of it performs in the same way at each time in the market. So getting that diversification is really helpful, and you can only really do that by investing into funds. The way it works is that you earn a share of the rental income from this basket of properties that you now own, and that's the cash flow from actual tenants that live in these properties or hire these properties. And the returns are typically in the region of somewhere between 3 and 8% per annum, although it can be a little bit lower and a little bit higher in some situations. There are 2 good ways that you can get access to these kinds of investments. You can either invest in it through something called REITs, real estate investment trusts, which are basically property funds listed on the stock market. There are a few Sharia compliant options. HSBC offers a real estate ETF, and then there are other ETFs out there that are not necessarily listed as Sharia compliant, but if you look at the debt ratio, it's below 30%. And so scholars would allow you to invest in those mainstream ETFs, but you have to keep an eye on that debt ratio, so make sure it doesn't go above the debt ratio that is allowed, which is 30% debt to market cap. If it does, then you have to sell it. There is also our Curate GBP Income Fund, which invests in property and distributes an income of 7.5% to investors. So this is all property backed, where the difference here is it's an income fund. You're not necessarily investing in the property and the capital appreciation. You're investing purely in the income. The fund is about 35 to 40 million pounds, which probably speaks to the popularity that it's had over the last 3 years of its life with investors. So you should definitely check that out. It's also ISA eligible as part of the Innovative Finance ISA wrapper that we have. If you're a UK investor, you can get 20,000 invested in that tax-free. So all of your earnings and growth after that grows tax-free. Of course, there are still risks involved with property funds or income funds, depending on the overall property market and the type of property that you're investing in. For example, during the pandemic, commercial real estate was hit due to people working from home. So you do have to bear in mind that no one option that we're going to be discussing today is perfectly foolproof. The best way really is diversification. Option number 4 is Islamic leasing products or Islamic leasing funds. Now, this is an option that often goes under the radar, mainly because leasing is not actually an easily accessible asset class for the vast majority of people. But if you can get access to a halal leasing fund or a halal leasing strategy, this can be a great way to get a passive income at a relatively lower risk. This is where I've put my mother-in-law's investment, for example. Leasing funds basically buy assets, cars, trucks, hospitals, machines, and lease them to businesses. So you've got this asset that these funds own, which means that you have this additional security, and the returns come from the rental payments, the lease payments, and that is perfectly halal. And the returns usually are in the range of 6 to 12% per annum. For example, we offered the Ayan Capital car leasing investment, which is where my mother-in-law's investment ended up, which buys cars and leases them in a Sharia compliant way to vetted UK businesses. Now, there are two key risks to be aware of here. Firstly, you've got defaults. So if the business or the person who has taken on this car or truck, whatever, stops paying. And secondly, the asset values start falling and they fall below how much you have got left to recoup in that investment. So the way that you mitigate that risk is, again, very simple. Rather than leasing one thing, you lease dozens of things. Rather than leasing to one business, you lease to dozens of businesses. And the way that you control how much the asset value is by modeling out those things right from the start and making sure that the payment plans that you're setting people on are always going to allow you to be able to be above water at any one point. Here, the profit is the lease income. So it's halal and it's asset backed, and most importantly, it's not interest. The final option is halal private credit funds. Now, what is private credit? It means lending in the mainstream world directly to private businesses that might not necessarily be able to get loans from a bank, because banks usually only want to give it to much larger businesses. This is the irony of banking, where the people that they want to give loans to typically don't need the loans, and the people who need the loans, they typically don't like to give them loans. But anyway, this is the riskiest investment on this list, but potentially offers the highest returns. But Ibrahim, isn't lending for interest haram? So what you were talking about? Yes, lending is haram, but halal private credit uses a whole range of other types of investments to be able to give finance to your small and medium-sized businesses. For example, you might use trade finance. For example, you might use asset-backed structures. So you know the stuff that I talked about earlier in terms of leasing, all of that stuff comes back into the picture here. So, instead of Ayan Capital giving someone some money to be able to buy a car and pay that off slowly, we as a business might be giving some money to a large engineering firm to buy heavy machinery, and they will then be paying that back off to us effectively as a lease. And that's a nice clean way of creating a halal financing arrangement with that company. The typical returns here are historically between 8 up to 15% per annum. This is the market average. This is higher than what you would usually see because of the risk being higher as well. But you will typically see that the kinds of returns that are charged are usually well below the 20% threshold, because 20% is roughly the net income that the average business makes day to day. And so you want to be able to make sure that the business has enough there for them to be able to grow as well. Why are these returns so high? Well, the reason is because you're financing businesses that banks ignore. So they are really keen to pay a little bit more to be able to access the capital that they have. I'm personally very excited about this particular asset class of private credit, because I feel like the one thing that Muslim SMEs up and down this country really lack is funding and financing. You can potentially get venture capital funding now because we offer that. They can potentially get private equity funding now because we've started to offer that. But there's very little when it comes to Sharia compliant private credit or Sharia compliant debt funding, and there's a lot of need for it, and it's not talked about. It's a taboo subject, but many Muslim businesses do take out conventional loans, and that's how they grow. And so we need to give them that alternative so they have the option to be able to switch over. And for those businesses that don't take out those loans, they've just not been growing, right? So we need to be able to unlock our community to be able to grow, and our mission is to help Muslims level up financially. If that is the goal, then we need to be able to unlock entrepreneurs to grow. And as investors, we can and should participate in that from the perspective of providing the money. We've done a lot of work in this space, and you can participate in that as an investor through the Curate US Dollar Income Fund. There's also platforms like Funding Sukuk and Irad in the Middle East that this US Dollar Income Fund actually invests in as well. And so through investing in this one fund, you are actually ending up providing funding lines to people all the way from Uzbekistan to the UAE, to the Middle East, and even the USA and the UK. So folks, I hope you can now see that if capital growth and higher risk investing isn't something for you, there are actually plenty of other options out there that might still suit you. These aren't necessarily get rich quick schemes, but they can help you build a steady halal income so that whilst you sleep, you are earning money for yourself and for your family. If you like this video, you'll love our video on how to become a millionaire with just a £2,000 salary. The link's below. Do share your comments, or if there are topics that you would like me to cover here on our channel, please do let us know in the comments. I look forward to reading every single one of them. That's it from me for now. Until next time, Assalamu alaikum.